Good morning, everyone, and welcome back to Morning Markets on the 7th of July. A couple of things that the team have been discussing this morning that I'd like to share with you. The first of which is just our usual review of asset markets, what's been happening in the past 24 hours. It was a good day yesterday for equity markets, where we saw the continued strength follow through from what had happened in Asia overnight, where we discussed the performance of the Chinese equity market yesterday and the performance there. So if we look at Europe yesterday, we saw the Euro Stoxx 50 up about 1.7%. We had the FTSE up over 2%, FTSE 100 that is, up over 2% on the day. And then in the US, we continued to see the NASDAQ reach all-time highs again, with the NASDAQ up 2.2%. And then the broader S&P 500 index was up 1.6% on the day. So strong performances from equity markets across the globe yesterday. Then if we look at sovereign bond markets, little change. 10-year yields have little changed over the course of the day, with the UK 10-year gilt at about 0.2% and the US 10-year at 0.68%. So little change there over the course of the past 24 hours. Currency markets, slightly different story. We touched on the weakness, or the resumption of weakness, I should say, in the US dollar over the past couple of days. And we saw that very pronounced yesterday against the euro, where the euro strengthened 50 basis points against the dollar. And indeed, the dollar weakened against the trade-weighted index as well. It's interesting just to, I think, to observe what's happening in Europe. I've touched on a number of the themes that have been relevant to the European market over the past couple of weeks. And just taking a look back over the past number of weeks, it's really interesting to see the performance of the European equity markets relative to that of the US. We talk a lot about the US, and that's important for the obvious reasons. But what have we seen there? We've seen an outperformance of the US by Europe over the most recent period. And that's something that we've touched on. It also speaks to the need to think about diversification in a portfolio, and why a broad exposure to these markets is important to enable our clients and the investors in our true potential portfolios to achieve their outcomes. So focusing on diversification to have that exposure to different regions, different asset classes within the portfolio is important. Then just looking at some of the other things that we discussed today, we looked at some of the economic data, of which there was a lot yesterday. I think what can we say there? In the US, we had the services ISM index, again showed a reading in above 50. That's a significant improvement from last month when it was below 50. I think we were at 57. That in and of itself is a material improvement, and it speaks to the rebound that we've seen as economies have reopened. I think the key challenge there is just thinking about the sustainability of that, particularly in light of the ongoing sort of rolling lockdowns, for a want of a better way to describe them, what we're seeing in the US as COVID-19 infection rates spike in a number of states. And then just turning to Europe and the UK, we had construction data and with retail sales data. The construction data in the UK again came in above the 50 mark, a positive. The employment aspect of that and the future-looking aspect was remained below 50, so that's something to watch going forward. And then in Europe, we saw a very strong rebound in retail sales in the Eurozone, and that's just a combination of the various different data points that we've touched on over the past couple of weeks. I think the key thing here is, yes, these are big improvement numbers. The Eurozone retail sales were up 17-18% month on month. That's to be expected when we just take a step back and we think about the lockdown and the lack of demand and the lack of activity. So seeing strong numbers or large numbers is mathematically what we would expect to see at this point in time. More instructive is to maybe take a step back and look at what's happening on a year-on-year basis, and what can we see there, that sales are still down about 5 to 6% from where they were in May of last year. Just then, and finally today, I think the one thing that the market may focus a little bit more on today is just what's been happening with COVID-19 infection rates. And we're seeing in Australia and Melbourne, we're seeing a return to lockdown period for 6 weeks to deal with the spike in cases there. And similarly, some measures are potentially being discussed in Tokyo as well, where we've seen a pickup in the daily infection rate as well. So something for the market to refocus back on. But as we've discussed many times over the past number of months, and COVID-19 is one of the real factors that's impacting sentiment within the market on a daily basis. And I think that's what we may see later on today. That's it for today. Thanks for joining me.